As of the current trading session on Friday, December 26, 2025, IREN Ltd is trading at $41.98, marking a slight intraday dip of 0.21% or $0.09. While this minor fluctuation might seem like typical holiday week noise to a casual observer using a basic individual brokerage account, it actually masks a massive structural shift that has completely redefined what this company is. Most people still categorize IREN under their Robinhood crypto watch lists as a Bitcoin miner, essentially a play on the price of digital gold. However, the reality of the business right now has drifted far from that simple narrative. The market is currently grappling with a massive $9.7 billion AI cloud services contract with Microsoft that was recently finalized. This isn't just another pilot program, it is a 5-year commitment that essentially turns IREN into a critical infrastructure provider for the largest software company on the planet. The shocker for most investors isn't just the contract size, but the massive $4 billion capital raise the company just pushed through to fund it. We are seeing a high-stakes trade-off where the company is trading its balance sheet health and shareholder dilution for a seat at the table with hyperscalers. If you are checking your SoFi active investing account today, you are looking at a company that is essentially a construction firm right now. They are racing to deploy over 100,000 GPUs by the end of 2026. The intraday volume we are seeing today is light because of the holiday period, but the underlying trend shows a consolidation around this $40 to $45 level. The market is waiting to see if they can actually hit their projected $3.4 billion annual recurring revenue target by next year. If they miss even a single deployment milestone at their Prince George or Childress sites, the downside could be significant because the valuation is currently priced for perfection. If you were looking for investment help on sites like those providing Schwab Intelligent Portfolios or other automated solutions, you might not see IREN because it often fails the stability test. It's a high beta stock with a beta of over 4.0, meaning it moves 4 times as much as the broader market. This isn't a stock for a conservative retirement plan or a standard Fidelity Iris portfolio unless you have a very high risk tolerance. It is more akin to a venture capital play that just happens to be publicly traded on the NASDAQ. The daily swings are driven by a combination of Bitcoin price action and updates on their GPU fleet expansion. For example, any news regarding NVIDIA stock or supply chain shifts in Blackwell chips directly impacts IREN because their entire growth model depends on getting those chips into their racks. Let's look at what the company actually does beyond the ticker symbol. IREN, formerly Iris Energy, owns and operates massive data centers in British Columbia and Texas. Their business model is vertically integrated. Instead of just renting space from someone else, they own the land, they secure the power contracts, and they build the substations. This is why Microsoft was willing to sign a nearly $10 billion deal with them. Hyperscalers are desperate for power. While Apple stock or Tesla stock might be the faces of the consumer tech market, companies like IREN are the ones providing the raw electrical power and cooling required to keep those companies' AI models running. Their sites are purely powered by renewable energy, which gives them a massive advantage in an environment where ESG mandates are becoming stricter for big tech. They aren't just mining, they are providing a utility. The past performance of the stock has been a roller coaster. If you had invested early in 2025 when it was under $10, you would be sitting on massive gains, but most of those gains came from the anticipation of the AI pivot. Now that the pivot is official, the story phase is over and the execution phase has begun. This is where many investors get trapped. They buy the story, but they don't have the patience for the construction timeline. IREN is currently building out its Horizon sites, which are specifically designed for liquid-cooled AI hardware. This is a significant technical challenge that most Bitcoin miners aren't equipped to handle. It requires a different type of engineering, a different type of maintenance, and a different type of client relationship. The institutional landscape for IREN is becoming more complex. Large brokerages and wealth management firms, including those using the Fidelity trading platform, are starting to initiate coverage. Recently, Goldman Sachs came out with a neutral rating and a $39 price target, which acted as a bit of a wet blanket on the stock's recent rally. The analysts' concern was exactly what we've been discussing: valuation and dilution. On the other hand, you have firms like Cantor Fitzgerald setting targets as high as $136, betting that the AI revenue will far outstrip the costs of the capital raises. This wide gap in analyst targets tells you everything you need to know about the stock. No one really knows how to value a Bitcoin miner that is transforming into a cloud provider. It's a hybrid beast that doesn't fit into traditional models used by most investing sites. As we look toward the future, the scenarios for IREN are bifurcated. In the bullish scenario, the Microsoft deal serves as a blueprint for further contracts with other giants like Google or Amazon. If IREN can prove they can manage 20,000 plus GPUs at high uptime, they become an acquisition target for a larger REIT or a hyperscaler looking to secure its own infrastructure. In the bearish scenario, the cost of debt for their convertible notes becomes a burden, and if Bitcoin prices crash, the mining side of their business, which still provides significant cash flow, stops being a safety net. The pressure on margins in the mining industry has been at an all-time high in 2025. With the hash price reaching structural lows, IREN has to run just to stay in place on the crypto side while simultaneously building a multi-billion-dollar AI business. It is also worth mentioning the competitive landscape. IREN isn't the only one doing this. You have companies like Core Scientific and TeraWulf pivoting hard toward AI. In your Robinhood Investments or SoFi Stocks watch list, you're likely seeing these names move in a pack. The differentiator for IREN is their scale of secured power. Having 3 gigawatts in the pipeline is a massive barrier to entry. You can buy GPUs, but you can't easily buy 500 megawatts of grid-connected power in a location with favorable cooling conditions. This is their moat, if you want to call it that. It's a physical, industrial moat rather than a software one. Comment below how many shares of IREN you currently hold, or if you prefer a different AI infrastructure play like Core Scientific or Applied Digital. When you think about self-investing and managing your own individual brokerage, you have to decide if you believe in the power-first thesis. The thesis is that in an AI-driven world, electricity is the ultimate commodity. If that is true, IREN is sitting on a gold mine. If the AI hype cycle cools down before IREN finishes its build-out, they will be left with a lot of expensive warehouses and a massive amount of debt. This is the reality that is currently clashing with the expectation of endless growth. The market movement today, that tiny 0.21% drop, is the silence before the next major catalyst, likely their next operational update where they reveal exactly how many of those Microsoft-bound GPUs are actually plugged in and generating fees. For those using the Fidelity app or Robinhood app to trade, it's easy to get lost in the daily percentage changes, but professional traders on the Interactive Brokers platform are looking at the hash cost versus the AI rental rate. Right now, the AI rental rate is significantly higher, which is why the pivot makes sense. However, the capital intensity is orders of magnitude higher too. You can't just buy a few more ASICs, you have to build entire liquid cooling loops and secure high-bandwidth fiber connections. This is a massive operational lift. The leadership at IREN has been transparent about this, but transparency doesn't eliminate risk. To summarize the situation, IREN is a company at a crossroads. The expectations are that it will become a premier AI cloud provider, a narrative that has pushed the stock up significantly over the past year. The reality is that this transformation is being funded by significant shareholder dilution and carries massive execution risk in a highly competitive and capital-intensive industry. They have the power, they have the land, and they have the Microsoft contract. Now they just have to build the machine. Whether you are using online investing tools or working with Fidelity Wealth Management, IREN represents one of the most aggressive picks and shovels plays on the AI boom. It is a stock that forces you to believe in a company's ability to reinvent itself or fear the financial strain that such a massive pivot requires. The central insight here is that IREN is no longer a Bitcoin company. It is a power infrastructure company that happens to mine Bitcoin on the side. The market hasn't fully digested this yet, which is why the price remains so volatile. If the execution holds up, the current $41 price point might look like a steal in 2 years. If they stumble, it could just as easily be a cautionary tale about the dangers of over-leverage during a tech cycle. Always remember that in online investing, the most popular narrative is often the most dangerous one to follow blindly. Stay focused on the deployment numbers